How's everybody doing? This is Xavier Clark. I'm just making a quick video for you. Nothing too fancy, but just to really, hopefully quickly kind of show some differences between payments of a 15-year versus a 30-year, and also how different rates can sort of affect a payment. We're just going to keep it very basic, not too involved, but at least kind of get the information to you so you can see it. Rates are kind of, they're kind of changing. They're definitely going up steadily. And so I get so many questions of, people wanting to know about interest rates, because that's sort of what people break a loan down to, essentially, is interest rate. Even though there's a lot more to a loan than just a rate. A rate is a very important aspect of a loan. But we're going to kind of just quickly just go through this. Again, this is going to be very basic, but just to kind of give you an idea. A couple of things that I've got to point out to you is that, just using 200,000 just as the number, it's kind of a basic number. Obviously a loan could be 50, 70,000. It could be 150, 120. It could be 400. It could be 600. But we're just going to use 200,000. And with all those numbers, I meant, thousands, but because we're talking about mortgages. So we're just using that number. And again, take these rates with a grain of salt to a degree. Just using numbers, depending on when you watch it and what your situation it is. These could seem high, low, crazy, good, crazy, bad, whatever, but don't focus on the actual numbers too much, because we're just trying to talk about a general concept here. All right. And then also, it's important to realize that these monthly payments do not include taxes and insurance and any PMI you might have with the loan. So it's important to point that out too. So those add hundreds to your payment every month. So these do not include that. One last thing too I want to point out is that on a 15-year, generally speaking, the rate is actually significantly lower than a 30-year, but we're just going to leave them the same so you can kind of really see apples to apples, so to speak, of what just having a 30-year versus a 15-year, regardless of anything else. So all things remain the same, including the rate, which again in real life on a 15-year is lower, but the payment is higher because there's a shorter time you're paying that loan back. Okay, so just looking at right off the bat, you can see that a 15-year has a drastically higher payment than a 30-year. I guess drastic is relative, but percentage-wise, a big increase. And it's well over $500 in this case, but percentage-wise is what you really need to focus on, because that dollar amount is going to depend on these things. But percentage, significant increase in payment, but also a significant decrease in total interest. And total interest, total paid, you just add this to whatever the loan amount was or is, and that gives you your total paid interest. I have another video where I talk a little bit more about that, because that's, in terms of payoffs and, how much you paid on a loan and all those kinds of things. But you can see that on a 15-year, you're going to pay less interest, and this is if you were to hold them for the entirety of the term, which most people do not. They either sell the house early and move. Most people don't hold a loan. It's said that the average is about 7 years, but again, this is kind of what that looks like. As you can see, as rate changes, payment goes up as the rates go up. Now, these are pretty good jumps, a whole 1% jump. Real quick, we're going to look at a couple other ones before the video is over, but you can see that a 1% jump with these at these levels, right? You're looking at over $100 a month in terms of what that does. And again, that is with these amounts. So again, you got to look at the percentage, which I believe on 1% is around a 12 to 13% average increase across loan amounts. Meaning a 1% increase in your rate changes the payment about 12%, give or take. And again, I've written an article at depth about that, which I encourage you to look at it if you care. But then lastly, this kind of shows you, again, no matter how much the rate is, or whether it's a 30-year or a 15, the amount that you borrow or the principal will stay the same, but the amount of interest will change. Okay? So obviously 30 years contain a lot more interest. In fact, at a certain point, you're paying more interest than what you even borrowed. You're paying back what you borrowed plus the whole loan amount again in interest. Whereas in 15 years, that's not really happening. And again, this is if you were to hold the loan all the way for the full term. Most people do not do that, and extra payments can change this. And again, my other video talks about that. So in closing, I'm just going to show you one more little situation with a couple more scenarios. Again, smaller differences, right? And also different loan amounts. So you can kind of see that oftentimes how much you put down can kind of affect the monthly payment just as much as what your rate may or may not be, or what your rate is, but how much you put down can affect it in a similar fashion. And again, this is not including your taxes, your insurance, all that plays. If you have PMI, that plays into it. Homeowners association dues, which are usually paid in lump sums, but that can factor in. It's not including your electric bills and all that stuff. But in terms of repaying a loan or a mortgage, you can see what these jumps do. So again, putting money down or additional monies, which in this case is a good amount of money, about $9,500, will influence your payment in a similar fashion, a similar difference, going from here to there versus just here to there in terms of rate. So again, not necessarily the most interesting thing, but it is important to just kind of understand this this dynamic. Again, smaller changes have a small impact in large changes, and this is kind of what you experience when you're kind of looking at different rate options and things of that nature, down payment versus rate options. So last thing I want to talk to you about on this is an important thing, because I see it a lot, is people trying to, they're only looking at the rate, or maybe only comparing that to another scenario. And it's important to also take into consideration the fees that you might have, specifically like a loan origination fee or points. Some places call it that. But it's important to really look at that. And the reason why I say it is because a lot of times you'll have to pay 1%, and sometimes you don't even actually get a lower rate. But let's say that you're paying 1% on a loan in terms of fees. On a $200,000, that's $2,000. And the difference, again, don't focus exactly on these numbers per se, but a 0.25% difference using these figures, you're looking at $29 a month. We'll just call it 30. It's going to take you more than 5 years to see the benefit of getting that lower just interest rate, all else being the same. Really 5.5 years. It'll take you about 66 payments, I believe, to kind of see the benefit of that. And so, that's 5.5 years. So if you end up not staying in the house that long, then you're actually losing money trying to get a lower rate. If you have maybe a different offer or something like that, maybe the rate's higher, but you're actually kind of benefiting by having less fees. Again, not necessarily the case, but it's important to kind of analyze that, or sit down with your loan officer and talk about that kind of thing. Important. And again, the last thing that's important about that is whether or not the seller is going to be paying that fee, or if that's something you're coming out of pocket with. So again, just kind of wanted to do an overview, nothing too fancy. Maybe, again, not the sexiest thing per se, but definitely important when you are getting a mortgage to kind of understand these numbers again, how little changes in rates or even larger changes in rates can kind of impact what your payment is and what you're looking at, and just kind of understanding how down payment and rate play with each other. So I encourage you to watch my other videos, and if you have any questions, feel free to reach out to me, send me a message, or anything like that. Take care.